Ladies and gentlemen, by now it is obvious that higher inflation is no temporary phenomenon. Inflation rates have exceeded central bank targets in many countries for more than 2 years now. Even in Japan, inflation was above 4% for some time, such that we can truly speak of a global trend. This trend could also be observed in countries whose central banks had increased their policy rates much earlier than those in the US and Europe. Hence, we conclude that it's not only the result of two expansionary monetary policies. In our new global view, we look at the structural factors that might lead to higher inflation rates in the medium term. Demographic changes might lead to higher wages. Deglobalization would lead to a less efficient and hence more costly way to produce goods and services. And fighting climate change could lead to higher energy prices. This will not necessarily make it impossible for central banks to defend their current inflation targets, but it will probably be politically more costly. Some economists argue that higher inflation rates would have the benefit that servicing increasing government debt levels becomes more easy. This is true, as we show in a couple of simulations. Still, higher inflation is no panacea. It weighs on savers and investors to the same degree that it relieves debtors. Finally, we should never forget that high inflation is a particularly heavy burden for financially less privileged parts of a society. Gold is often seen as a hedge against inflation. Indeed, it is remarkable that it has been used as a store of value for thousands of years. Its short-term movements, however, are not so much linked to inflation developments. We discuss which other factors determine the gold price and present an empirical approach that can explain movements of the gold price in the short term. In particular, these are real interest rates, the US dollar, and risk premia. If you are interested in our views in detail or a roundtable discussion with first-hand experience from different continents, please have a look at our new Global View publication. Thank you for your interest and have a pleasant week.